Today we are going to be talking about ASML and their upcoming earnings announcement. This is a company that in the last year reached a stock price of over $1,000 per share. However, since that time period, the stock has fallen by over 30%. But in the last week, TSM has reported their earnings, and that should give us a little bit of insight as to what we can expect from ASML. So in today's video, we will take a look at TSM's earnings and what we could potentially take away from them in reference to ASML, and then we'll dive into the issues that ASML has faced over the last year and how those could evolve moving forward. And finally, we will look at ASML's earnings and what is expected to be announced on January 29th. And as always, thank you guys so much for the continued support. It means so much to me to see the channel continue to grow. And if you haven't yet subscribed, make sure to go down below and subscribe for more videos like this one. And while you're down there, if you enjoyed the video, drop a like. Thank you guys so much again, and enjoy the rest of the video. As I mentioned in the intro, ASML has been over $1,000 a couple of times in the last year, but from its all-time highs of around $1,100, the stock has now fallen over 30%. And from its lows that achieved actually in November of 2024, the stock had previously fallen by 40%. So we've seen around a 15% move up in the stock price over the last couple of months. And part of the reason for this more recent strength in ASML's stock price has to do with TSM reporting their earnings. On Thursday, January 16th, TSM reported their earnings, and ASML's stock price ran up by over 6%. And TSM saw a similar move up in their stock price as it rose by 4 to 5% after their announcement. TSM did come through and beat on both their top and bottom line numbers. However, they weren't very large beats. We saw them beat on EPS numbers by around 0.5%, reporting $2.24 of EPS. Don't ask me why, but on Google, this shows that it is in Taiwan dollars. However, it's actually in US dollars. So just keep that in mind if you do Google these results. Revenue, however, again, for whatever reason, it's actually in Taiwan dollars. They reported in US dollars 26.38 billion US dollars of revenue, which was only a 1.5% surprise compared to what analysts were expecting. The moves that we saw from TSM in terms of their stock price, as well as ASML and a lot of the other players in the semiconductor industry, has less to do with what TSM actually reported and more to do with the fact that they are seeing continued AI demand throughout 2025. And the TSM CEO made the following comments about this continued demand. We observed robust AI-related demand from our customers throughout 2024. Even after more than tripling in 2024, we forecast our revenue from AI accelerators to double in 2025 as a strong surge in AI-related demand continues as a key enabler of AI applications. And the reason this statement is so important is because it starts to answer a question that has been leaning over the semiconductor industry over the last couple of months, and that is, how long will this demand actually continue? We have seen companies like Microsoft come out and talk about how much money they are spending on AI infrastructure. However, the question mark has been whether that is going to continue throughout 2025. And Taiwan Semiconductor began to answer this question throughout this earnings report. They even provided guidance for Q1 of 2025 of gross profit margins being between 57 and 59%, but more importantly, they're expecting their revenue to continue at these higher levels, expecting $25 to $25.8 billion in the first quarter of 2025. Obviously, quarter over quarter, that would be a slight decline. However, year over year, these are still massive increases. In the fourth quarter of 2023, they put up around $21 billion of revenue. And obviously what we saw from their numbers is they are now sitting at $26 billion of revenue. That hasn't registered yet on this chart. They don't have the most recent quarter. However, if we look at Q1 of 2024, they put up around $18.8 billion. So obviously increasing that to $25 to almost $26 billion year over year would be a massive jump up. And this is about what those numbers would look like on this chart. So they came through with $26.4 billion of revenue in the fourth quarter of 2024. That's around 38.8% growth year over year. If they come in around the midpoint of their guidance for first quarter 2025, 2025, that would be $25.4 billion of revenue, which would be around 35% growth year over year. But again, the question remains of how exactly does TSM's earnings relate to ASML? The first is very obvious. If the semiconductor industry is doing well as a whole, that is going to affect both of these companies. If TSM sees this continued demand, they are going to need to purchase and potentially build out more facilities that may involve purchasing more equipment from ASML. The second point that has a big effect on both of these companies is foreign policy from the US, especially when it comes to China. We have seen TSM actually combat this a little bit better than ASML, as they have built out facilities within the US to produce some of these chips. And this has been an initiative from the US to try and incentivize a lot of these companies to build out this infrastructure within the US. And that has helped TSM overall. However, ASML has not taken this approach. They are a Dutch-based company, and this has had some interesting effects on the company as a whole. And that's because ASML now has to navigate a number of different relationships. Obviously, they have the relationship with the Dutch government or Netherlands government. They also have to navigate the relationship with the US, because that is going to be a long-term customer of theirs, and try and navigate a relationship with China, because they currently get a large portion of their revenue from the country. And this dynamic is very clear when you look at their Q3 2024 earnings report, because 47% of their revenue from the quarter came from China, with 21% coming from the US. And this is different even from Q2 of 2024. They saw similar numbers from China, making up around 49% of their revenue. However, the US only made up 3%. So we see this clear expansion of spending within the US in terms of where ASML is getting their revenue. So it's important for them to maintain a relationship between both of these countries. And we will have to see how this situation evolves over their next earnings. They're expected to announce them on January 29th, and analysts are expecting EPS numbers of $6.92 and revenue to come in at $9.31 billion. And overall, that would be a great quarter for ASML. They saw a drop of 20% for their top line numbers in the first quarter of 2024. However, since then, they have seen an uptrend and actually achieved record revenue in the third quarter of 2024. So if they post around $9.3 billion in Q4 of 2024, that would also be a record quarter, and that would get them back to around 20% growth year over year. And this would also represent record EPS numbers. Last quarter, they posted $5.81 of GAAP EPS. If they come through with over $6 of EPS, that would be absolutely massive and get them back on a trend for a trailing 12-month EPS to break records of their previous $21.52. And really overall, this quarter is expected to be a record quarter for ASML. We can see the analysts on Yahoo Finance have an average EPS estimate of $6.73, a low of $6.50, and a high of $7.06. What's a little bit surprising, however, to me is the current year projections. There are 32 analysts covering the stock, and the average EPS estimate is only $19.10. I personally believe that they're going to be a lot closer to this high-end estimate of $20.06. However, just like TSM, the important thing for ASML is going to be around their guidance for 2025. Right now, EPS estimates on Yahoo Finance are sitting at an average of $23.25. The low is $20.86, and the high is $32.98. This is a huge range for EPS numbers for a company, and it kind of speaks to the uncertainty around analysts and what they expect from the AI and semiconductor industry in 2025. And we have a little bit tighter of a range for revenue estimates for 2025. The average revenue estimate is $32.22 billion, the low is $29.46, and the high is $38.61. The average estimate comes out to growth of around 15% year over year. In my opinion, we could see growth of closer to 20% in 2025, because keep in mind that ASML had a very weak Q1 and Q2 of 2024. If they put up strong numbers in Q1 and Q2 and just throughout the year in 2025, I think that they could grow a little bit quicker than what analysts are expecting. Currently, I do not own any shares of ASML, but if I were an investor, there are two things that I would be paying very close attention to. The first, again, is their relationship with China as well as the US and what splits we are seeing from revenue. I would like to see the US revenue percentage go up by a significant portion. In fact, if we could actually actually see these numbers be flipped, that would be a very good thing for ASML. If the US was sitting around 50% of their total revenue and China was only making up around 20%, that would be a significantly better situation for the company overall, because the US could potentially put a lot of restrictions on China and that could affect their business significantly. And the second point to pay very close attention to is around guidance. When we think about ASML and where they sit on the supply chain within the semiconductor industry, they are very important because they are on the front end. And I think what we could see is if we start seeing some of these large companies like Microsoft potentially pull back on their spending for AI infrastructure, that will first affect ASML and kind of trickle down throughout the rest of the industry, because the equipment that is needed to produce these semiconductors is produced by ASML. And if we see demand start slowing, ASML is probably the leading indicator in where we would see slowing growth initially. But keep in mind, that is all just my opinion. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And I'm switching it up just a little bit because we are doing the portfolio review at the very end of this video for the people who stick around for the entire video. Right now, it's sitting at a value of $58,809.89. And we did make one larger purchase in the portfolio this week, and that was 100 shares of Super Microcomputer. We are now sitting at a market value of $4,600 and a cost basis of $4,900. So we're down around 6.5%. However, I see myself averaging into this position. I previously talked about only putting around $1,500 in this stock. However, one thing that I've tried to do better over the last year is being more aggressive when I have conviction about a company. And I think Super Microcomputer, in terms of its valuation, is trading at around a 9 forward P ratio. I see plenty of room for this stock to go up, whether it's just valuation growth or even earnings growth over the next year if we see the AI play continue in 2025. Other than that, nothing else has really changed in the portfolio. We still have Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. And I do still hold SCHD and VYM. Our cash position obviously has gone down slightly with that purchase of Super Microcomputer. It's currently sitting at a value of $15,000. And finally, for the joke of the day, how does a North Pole carpenter fix something broken? Check the comments down below for the answer. Thanks for watching.